Thank you for joining us today on Black Investments Matter. I'm Antoine Anderson, and today it's all about the debt ceiling crisis and its effect on your biggest investment, which is going to be your home purchase. Let's talk. First and foremost, the debt ceiling crisis is a uniquely American self-inflicted wound that we cannot afford at this time in America as an investor. Why am I talking about it like this? Well, one, if you're trying to buy a home, right now you're faced with so many factors. The interest rate is going to be one of them. We have been spoiled in this country for far too long when it relates to low interest rates and getting into homes. Now we have a 1-2 punch of low inventory in many areas of the country like Atlanta and ridiculously high prices, all-time high prices on a home. Couple that with the proposed increases in the mortgage interest rate calculation should America default on its obligations, its financial obligations, causing the banks to jack those interest rates up even higher. That could spell doom and disaster for anyone trying to either buy a home for themselves or flip it as an investment. Let's talk about it. Historically, interest rates hit their highest back in 1981. Back then, the interest rate was somewhere in the neighborhood of 16%. It was like 16.63%. However, the average price of a home was in the neighborhood of $68,000 to $100,000. Now, even at that high interest rate, over the life of a loan, you're going to be paying twice and a half in that payment. So that $100,000 would turn into, what is it, $1,500 a month, somewhere in the neighborhood at that rate. For 30 years, that's 360 payments. Yeah, it's a lot of money. You're paying like $380,000 over the life of the loan. Now, let's contrast that to today's numbers when the average price of a home is significantly higher. It's at $240,000. But the interest rate is holding steady at 7%. Now, that could change with, a default with this debt ceiling debate. If banks begin to charge 9 and 10%, then we are going to be in some really prolonged agony as it relates to getting into a home. At those numbers, 7% at a $240,000 loan, you're actually paying $35,000 less than what Americans were paying at the peak of that 16% interest rate back in 1981. Is that good news? Well, depending on where you're coming from. If you are currently renting in America, especially in the metro area like Atlanta, where the average price or cost of a 2-bedroom apartment is in the $2,000 range, yeah, you need to try to start thinking about saving some money, putting a down payment together, and getting in a home to where you're going to be paying anywhere from $1,300 to $1,500 a month if you qualify for one of those low interest rate mortgages. That's 7%. It's a cost-saving measure at this point. It's simply a matter of inventory that is going to keep you out right now. It is also a seller's market, meaning that people who already own homes are going to ask far more than that $240,000 that these houses are going for right now. And that's on the low end. A home at around 1,100 square feet in Atlanta. They've been going quite a bit higher than $240,000. The numbers just won't lie. Now, granted, historically, we're not there yet. You're still better off owning a home by the numbers over the life of a loan and that's based on 30-year numbers. But the obstacles you're going to face to getting that loan at a time where this debt ceiling debate could adversely affect your employment with layoffs predicted. Yeah, something to worry about. Let me know what you think in the comment section, and tell me what your experiences have been if you are trying to find a home. We would love to hear from you. Thanks for joining us. Please like and subscribe, and I'll talk to you later.